The price of oil is the first thing I look at when I wake up in the morning every single day. If it dropped or rose very quickly while you were sleeping, means there was some bad news. Right after that, I look at the percentage yields of the 10-year and the 2-year treasury. It's important. If those yields went up very quickly, that can suggest a lot of market pessimism. People are flocking towards safer assets. If those yields drop, that means big money is a little bit more speculative, and maybe, just maybe, the market's going to start to do a little better. I then pay attention to this DXY, the strength of the dollar, because those reinforce everything I just told you about treasuries. The US dollar, just like treasuries, are a safe haven asset, so when there's a lot of uncertainty, people flock to it from all over the world. So let's look at today. First, we have to apply it to the context of everything that's going on. World markets are scared because they have no idea what to expect because of US foreign policy, along with the Chinese economy still not fully recovering from COVID. A weak Chinese economy, which is the world's largest manufacturer, means that the price of oil is going to stay low, as we've been seeing, and this has been a consistent trend for a couple years now. Treasury rates have been consistently dropping because the 10-year was almost 4.7%, might have been even higher just a month ago. Yields for the 10-year and the 2-year treasury have dropped over the past month, but over the past years, they're higher. But because some of the data suggests that the economy is cooling down, it means that the Federal Reserve may not be so aggressive towards inflation, and they may reduce interest rates within the next few months, maybe 6 months. So for me, and for me only, I look at the price of oil kind of like supply side economics. And when I look at treasury yields and the DXY, I look at that more as monetary policy, dollar demand. Even when I am not investing, and I don't invest for months at a time, I am looking at these metrics every single day just to know what's the temperature of the world. What news reports am I going to be flooded with when I start looking? Because these 4 metrics that I'm bringing to your attention can tell you a lot of why what's happening in the world is currently taking place. When I see that the strength of the dollar is high or even higher than it is right now, I see a lot of articles about how the world is trying to de-dollarize, and that's why BRICS gets so much attention. That exponentiates when the price of oil starts rising along with a very strong dollar. While China's demand for oil right now is lower than it was before COVID, it still heavily relies on that as a source of energy to keep their manufacturing sector alive. Now, when the strength of the dollar is high and the price of oil is low or lowering, like it is right now, that really hurts Russia, because Russia wants to have dollars to be able to access the world market, but they heavily rely on the sale of oil to keep their economy afloat, especially to be able to fund the war. India is loving the cheap oil right now, but they are hating the very expensive dollars, but they can offset some of that dollar hatred by being able to refine all this cheap Russian oil that they can get and then sell it to Europe at a higher price. Now, Saudi Arabia is the master in carrying out the balancing act between the price of oil and the strength of the dollar. They are sitting on at least $400 billion in foreign exchange reserves, so a strong dollar favors them heavily. Now the price of oil is low. That doesn't favor them too much, but because they have so many US dollars, they can still make a great deal of investments to further enrich their economy. Saudi Arabian currency, the rial, is pegged to the US dollar. It's about 3.3 rial to 1 USD. So when the US dollar is stronger, so is Saudi Arabia's currency. And because Saudi Arabia partakes in something called petrodollar recycling, they just take the dollars that they get for selling oil, they just put those into US Treasury bonds, they enjoy a very high yield. When the strength of the dollar is very high and the price of oil is rising, that means that Saudi Arabia is profiting immensely from these dollars. They get to enjoy a very high treasury yield from the petrodollar recycling. Their currency goes up, so that means they can import more. Now, I spent a lot of time talking about Saudi Arabia because not a lot of people understand in how many different ways that country is integral, not just to the United States, but to the entire world economy. Then, of course, is the United States. When the strength of the dollar is low, that's very good for American exports, and we are the world's second largest manufacturer and the second largest exporter. Now, of course, a weak dollar definitely hurts American imports, but it can incentivize to further reshore a lot of our manufacturing. When it comes to a strong dollar, that is incredible for American imports because now we can keep buying more stuff at a very cheap price, especially Chinese goods. But that also means dollars are very expensive, and anything in America that's priced in dollars, which is everything, becomes that much more expensive for every single American. We have a strong dollar and a very low price in oil, which means that we are approaching the minimum of our break-even cost, which is bad. Break-even cost is how much it costs to drill a new well and get oil out of it. I believe right now it's $65 to $67 per barrel. And then you're immediately going to wonder, why are gas prices still as high as they are if oil is getting cheaper? Remember that gasoline comes from refined oil, and we don't have enough oil refineries. We are the world's largest producer of oil, and we can keep producing even more of it, and we will still not see cheap gas prices, because it doesn't matter how much of it you have if your refining capacity is as limited as ours is. But anyway, looking at those 4 metrics can give you a great deal of perspective on how the world is working. I hope you enjoyed this.